You know, in the world of nuclear energy, sometimes the most important signals are, well, they're the ones that seem to make the least sense. Today, we're going to dive into this really fascinating paradox right at the heart of the nuclear fuel market. And believe me, it's a puzzle that tells us a much, much bigger story about the future of energy. So let's unpack it. It all starts right here with this one number, $177. Now, this isn't the price of gold. It's not oil. It's not even the price of uranium itself. No, this is something else entirely. This is the price for something called a Separative Work Unit, or SWU for short. And what that is the cost of the super high-tech, energy-guzzling service of enriching uranium to make it usable as fuel. And that price? It has just absolutely shattered every single previous record. Okay, so you'd think, right? A record price like this, it's got to be a signal of a booming industry, which should send demand for the raw material, uranium, just skyrocketing. But it's doing the complete opposite. So how on earth can that be? That's the paradox we are going to crack today. To get our heads around this, we first need to understand how nuclear fuel is even made. It's this whole multi-step industrial process, and honestly, the economics at each stage are absolutely key to solving this. So the whole journey kicks off with mining raw uranium ore. From there, it gets converted into a gas, which then goes to step 3, enrichment. Now, this is the crucial part for our story. It's where the useful U-235 isotope gets concentrated. And finally, it's all fabricated into fuel assemblies. The main thing to remember here is that enrichment isn't part of the raw material cost. It's a separate, high-tech service with its own price tag. And the price of that work, well, that's measured in SW. Think of it like this. If uranium is the ingredient, SW is the cost of running the incredibly complex and energy-hungry kitchen, all those centrifuges that cook that ingredient into usable fuel. Now, here's where it gets really interesting, because the chefs running these enrichment plants, they have a critical economic choice to make, and it's based entirely on the price of their ingredients versus the cost of their labor. So it all boils down to this really simple trade-off. Let's use an analogy. Imagine you're making orange juice, okay? If your oranges are super cheap, but your juicer uses a ton of expensive electricity, you'd probably just toss a few extra oranges in and not worry about squeezing every last drop, right? That's overfeeding. But now flip it. If the oranges themselves are expensive and your electricity is cheap, what are you going to do? You're going to squeeze every single one of those oranges for all they're worth to get the maximum juice. That's underfeeding. And in our world, the oranges, that's uranium, and the electricity, that's SWU. And this table here, it just lays out the economic logic perfectly. On one hand, you have a cheap SWE environment, like a few years ago when it was around $36. It made total sense to overfeed, use more raw uranium to save on the enrichment cost. This actually boosted demand for uranium. But now, in today's $177 world, the tables have completely turned. Enrichers are underfeeding. They're using more of their expensive effort to conserve every bit of uranium, which in turn suppresses near-term demand. And listen, this isn't just some abstract theory. This is exactly what's been playing out in the real world. The price history itself tells this story perfectly. This chart shows it all. It tracks the long-term price of SWU over the past decade. You can literally see this long, deep bear market where prices were just scraping the bottom, followed by the absolutely explosive surge we're in right now. Understanding this curve? Well, that's the key to the whole paradox. So if you look at the bottom of that curve, back around 2018, SWU prices had cratered to about $36. Enrichment was dirt cheap. So what did the facilities do? It made perfect economic sense to just pile in more uranium feed and use less effort. This was the age of overfeeding, and all that extra uranium being used effectively acted as a secondary supply, which helped keep uranium prices themselves pretty low. Now, fast forward to today. At $177, the entire incentive has flipped on its head. Enrichment is now the expensive part of the equation. So facilities are underfeeding. They are running their centrifuges harder and longer to squeeze every last bit of value out of less uranium. And that right there is why these record-high enrichment prices are putting a lid on near-term uranium demand. So, does this mean the bull case for nuclear energy is broken? No. Absolutely not. In fact, it's pretty much the opposite. We have to look at why SWU prices are so high in the first place. So yes, okay, in the immediate term, this whole underfeeding dynamic is a bit of a headwind. It's putting a temporary lid on the demand for raw uranium. But, and this is the really important part, That's just one tiny piece of a much, much bigger picture. See, the reason SW prices are at a record high is because the fundamental demand for nuclear fuel is absolutely exploding. You've got over 60 new reactors being built around the world. You have a massive geopolitical shift as Western utilities move away from Russian enrichment. You've got a decade of inventory being drawn down, which means supplies are finally getting tight. And you have governments everywhere waking up and refocusing on energy security. This high price isn't the problem, it's a symptom of a powerful, structurally tightening market. So here it is, maybe the single most important takeaway of this whole thing. The underfeeding we're seeing today, it's just a small, cyclical ripple on the surface of a huge, long-term wave that's pushing the entire nuclear sector forward. So the crucial point here is to really see the market with nuance. It's so important not to mistake a short-term side effect for a change in the long-term trend. This record price for enrichment isn't a bearish sign for uranium. It's a flashing bullish signal that the entire nuclear fuel machine is revving up for a major expansion. And the market? Well, it's just using every economic lever it has to adapt.